banking services, or we can also name it as functions of a bank, right? So before coming to this, we must know the meaning of a bank. So bank is a financial institution which accepts the deposits from the persons who have the excess funds, and then it lends those deposits or those funds to the person who need them, right? So for example, now I am depositing certain money into the bank. So in return, bank is giving me certain interest or certain benefit in the form of money, in the form of interest, right? So for example, bank is providing me 4% interest per annum. Okay, now I am taking certain loan from the bank. Then bank will charge certain interest on me. It means that I have to pay some extra money to the bank for providing me the loan, right? So now the bank is charging me 10% interest. Okay, so this is what the bank is giving us, and this is what the bank is receiving from us. So the difference between these 6% will be the profit to the bank. Okay, so this is how bank functions. So now let's have a look at the functions of the bank. First is acceptance of deposits. So banks accept certain deposits from us in the form of fixed deposits, current deposits, saving deposits, and recurring deposits. Okay, so first is fixed deposits. So here what happens is, generally here certain amount is kept fixed with the bank for a certain period of time. For example, I am keeping rupees 2,50,000 as fixed deposit with the bank for 3 years, right? So the bank will keep the amount for 3 years and it will give me certain interest, right? So during that 3 years, I cannot withdraw this amount. Actually, I should not withdraw this amount. We can withdraw only in case of emergency. So what if we break this FDs? Then the bank will not provide us the interest. Okay, so if we want the benefit of more interest, we can keep the amount as fixed deposits with the bank, right? So here in fixed deposits, the bank charges us maximum amount of interest. It provides us maximum amount of interest than any other forms of deposits. Okay, so the minimum period for which the FDs can be kept is for 7 days and maximum is for 20 years, right? So this is what we call it as fixed deposits. When we open FD accounts, then we can keep the fixed deposits with the bank. Okay, next is current deposits. So usually this type of accounts is preferred by the businessman, right? So because they have to do a lot of transactions in a day, they opt for current deposit accounts, right? So here what happens is, the transactions in this type of accounts will be more, and the bank will not provide any interest on these because it facilitates the easy withdrawal and transfer of money in this type of accounts. Okay, so this is current deposits. Next, saving deposits. So these are very common type of accounts or deposits accepted by the bank. So many people opt for this. So when you open a savings bank account, then you will enjoy the maximum benefits like debit cards, checkbooks, etc. Right? So bank will provide interest on saving deposits. Right? Next, see here in SB account, the interest that is provided by the bank will be lesser when compared to fixed deposits account, but more than current deposits account. But when compared to current deposits account, the transactions that are carried on will be less in this type of account. Okay. Next, recurring deposits account. So basically this type of account is preferred by those who save monthly, right, or quarterly or 6 monthly, like that. So for example, I have a salary of rupees 30,000, then every month I am saving almost 10% of it, that is rupees 3,000, that I need to deposit in the bank. So then I can go for recurring deposits account. So every month or quarterly or half yearly, I save certain amount in this type of accounts. So that is what we call it as recurring deposits account. Okay. Next function is lending of funds. So when the bank accepts the deposit, it will have to invest those funds, right? So it can invest them in any companies, or it can lend those funds to general public. Next is lending of funds. So lending of funds can be done through overdrafts, cash credits, discounting trade bills and term loans. Okay, so first is overdrafts. So overdraft is the facility which is provided by the bank. So in case of when I withdraw more than the amount which is present in my bank account. For example, I have rupees 40,000 in my bank account, right? But right now I need rupees 50,000 urgently. So what the bank will do is bank will provide me 10,000 rupees extra in the form of overdraft, right? Which I have to repay to the bank along with certain interest. Okay, so when I withdraw more than the amount present in my bank account, that I can call it as overdraft. Okay, so this is also applicable in case of credit cards. Suppose I own a credit card, there are rupees 10,000 in my bank account, but I shop for rupees 12,000, right? So that 2,000 extra will be provided by the bank in the form of overdraft, which I have to repay to the bank along with certain interest. Okay, clear? Next, cash credit. So when I need some cash, I can go to bank. The bank will give me cash credit. So again it is same. I have to pay certain charge of certain rate of interest along with the principal amount to the bank. Okay, that is what we call it as cash credits. Next, discounting trade bills. So we know that there will be bills of exchange, bills receivable and bills payable, right? Suppose assume that I am a person named A. I sell certain goods to a person named B, right? So what the B does is he gives me a bill and he will tell that right now I am not able to pay the money. I will repay you in 3 months. So here we are making a credit sales, right? So now, but right now here I am in need of money, right? So what I can do is I can take that bill and deposit in the bank. Now what the bank will do is assume that the amount present in the bill is rupees 4,000. Okay, so the bank will accept that bill and will give me rupees 3,800 immediately, right? The difference, that is rupees 200, will be the profit to the bank. So this profit it will charge for repaying the money immediately. So when I am in need of the money urgently, I can go to bank, get my bills discounted and get my money immediately. So this is what we call it as discounting the trade bills. Okay, next, term loans. So again this is the loans which are provided by the bank. So they may be either short term, mid term or long term. So short term loans means we have to repay the loan amount within the span of 1 year. Okay, so that is what we call it as short term loan provided by the bank. And mid term is from between 1 year to 5 years. Right? And if we take the loan for more than 5 years, that will be called as long-term loan. Right? Now the interest rate will differ on every term of loans. On short term it is more, on mid term it is medium, and on long term the interest rate will be less. Alright? So this is what we call it as loans. Now the third service provided by the bank is cheque facility. So we all know cheque, right? We all have used cheque for making transfer of payments. Suppose when I have to give certain amount to the third party, I can give him cheque instead of cash, right? Now what the third party will do, he will go to the bank, deposit the cheque and the bank will provide him cash, right? So that is what we call it as a cheque. Now the cheques are of two types, bearer cheques and cross cheques. See, these both checks are used for transferring the funds or for paying the amount which we have to pay to others. Right? Now, what is the difference between the bearer check and the cross check? See, suppose our check get lost, our bearer check get lost, then if the person who is having that bearer check can go to the bank, he can get the money. Right? The banker will give him the money in his hands. Right? But the cross check, the money will not be given physically. The money will be transferred directly into the account. So here in this case, even if our check gets lost or if it gets stolen by someone, then the amount will be deposited safely into our bank account directly. The banker will not give the physical cash to the party who is presenting the check. Okay, so this is more secure. Now how a cross check look like? So this is a check then it will be crossed here or at the back side of the check. Okay, so cross check is more secure when compared to bearer check. Alright, next, remittance of funds. Here remittance in the sense transfer of funds. Again here we can transfer our funds using these facilities. So that is bank draft. So bank draft, again it is like a check itself, but it is not a check. See, it is a draft, okay, which is issued by the bank. Now what is the difference between a check and the draft? Both are used to make the payment to the third party, right? But here what happens is, we have heard certain cases where the check gets bounced, right? Some people will give us the check even though when they don't have that amount in the bank, right? With or without information, they will give us the check. Now either we can get the money back or the check gets bounced and we will not get our money. But in case of bank draft, there will be a guarantee that there is the particular amount which is mentioned in the draft is there in the account. For example, I have a bank draft of rupees 400. Then I have the guarantee that I will get this money. But it is not in the case of checks, right? It may get bounced, but here the drafts will never get bounced. Okay, so this is the difference between a check and a bank draft. Next, pay orders. So again this is issued by the banker. It will be issued by the banker on behalf of customers to the third party from whom we have to receive the amount. For example, I am A, I have to receive certain amount from B. So the banker will give me the give B the pay order to pay certain amount to A. So that is what we call it as pay orders. Okay, next, mail transfers. Here again the transfer request will be sent in the form of mails. Here the transfers will be done using electronic media or through mail, right? Next, allied services or other services which are provided by the bank to its customers. So they are bills payment. See, we have to pay our monthly bills, right? Like telephone bills, electricity bills, etc. So the bank will pay our bills on behalf of the customers, right? Next, locker facilities. The bank will provide us certain lockers where we can keep our valuables in safe custody, right? So in return of that, bank will charge us certain service charges. Okay, next, underwriting services. So banks also acts as underwriter to many companies. So now who is an underwriter? He is a person who provides the guarantee for selling the securities of the company. For example, I have a company named ABC. Okay, so this is my company. Now bank is my underwriter. For example, I am issuing 500 shares in the market. So in this 500 shares, only 400 shares are sold or they are purchased by the public. Remaining 100 shares are not sold yet. Now what the bank will do? The bank will purchase these 100 shares from ABC. So that is what we call it as the underwriter. So bank will also provide underwriting services to many companies. Okay, next, buy or sell securities. Now for example, if I want to purchase certain securities like shares, debentures, bonds, etc. from any company, so bank will do it on behalf of the customers. So that service is also provided by the banker. So along with purchasing or selling, the bank will also collect the dividend which is provided by the company to its investors. Okay, if I am investing in some company, I am the investor of some company, so the bank will collect the dividend which is provided to me by the company on behalf of me. Okay, so that service is also provided by the banks. Next, payment of insurance premium. Suppose I have a insurance policy. I have to pay the premium monthly, right? So on behalf of me, my bank will do the job. Okay, so that service is also provided by the bank. Now, there is another sector in banking which is rapidly developing nowadays. It is like creating revolution in the banking sector in our country, right? So that is e-banking, or you can also say it as electronic banking. So which means that carrying on the banking activities using electronic mediums. Okay, so the services provided by the e-banking are ATMs. So we all have visited ATMs, right? We all have enjoyed the services of ATM. So in ATM, we can withdraw the money, we can check our balance, or we can make the inquiry regarding our accounts, and we can also get the bank statement from ATMs, right? It will be available in 2 or 3 languages, right? Next, the first ever ATM in the world was installed in London by Barclays Bank. A person named John Shepherd Barron was the person who gave the idea of ATM, which was immediately accepted by the Barclays Bank, and the ATMs were developed in the world, right? In India, the first ever company to introduce ATM is HSBC Bank, okay, Hong Kong and Shanghai Banking Corporation, right? The first ever bank to provide mobile ATM services is ICICI Bank, okay. In India, the first ever ATM was installed in Mumbai in the year 1987 by HSBC, right? Now, in ATM, there is a certain withdrawal limit. So, as I said, we can withdraw the amount from the ATM, but there is a certain withdrawal limit for it, right? So, the limit is rupees 25,000 only we can withdraw in a day. So, that is one of the main disadvantage of ATM, okay? Next, EFTs. That is electronic fund transfer, and in that again we have NEFT and SWIFT. So NEFT stands for National Electronic Fund Transfer. So here, this is the medium through which the funds can be transferred from one person to another who is having the bank account in any other banks. For example, I am a person named P. I have a bank account in ICICI Bank. Now I need to send certain amount to the person named Q who has the bank account in SBI Bank, right? So now how this can be done? It can be done through NEFT. So now what I need to do, I need to go to my bank, fill all the necessary details, then provide that form to the banker along with the money. Then what the banker will do, he will accept the form as well as money. He'll provide you a receipt. Then he will enter that information into his computer. That computer will be linked with the main computer of ICICI Bank, right? So as soon as this information gets stored into the main computer, so along with this information, there will be many other informations throughout India, right? So whoever are using NEFT, all their information will be stored in one computer. Now what this computer will do is it will contact to the main computer of or main branch of SBI, right? So there the verification will be done, like what the transaction, suppose I had to pay rupees 5,000, then all the verification process will be done and this 5,000 rupees will be transferred to SBI account. Then the person named Q will receive rupees 5,000. So this whole process takes around 5 to 6 working days. So here what happens is in NEFT the transactions will be processed in the form of batches, not single transactions will be processed, right? For around 1,000 to 2,000 transactions will be processed in the form of batches. Hence it will take more time, for around 5 to 6 working days or sometimes even more, right? Now when we come to RTGS, again it is same. We can transfer the funds from one bank account to another bank account in different banks, right? But here what happens is the transaction time will be less, or we can say that the transactions here will be processed immediately. So as soon as the information is entered into the computer, that process will start. Hence it will take only 1 or 2 working days, right? So RTGS stands for real time gross settlement system, right? So this is the difference between NEFT and RTGS. And there is another difference. So there is no minimum limit for NEFT. We can send even rupees 100 through NEFT. But in RTGS, minimum of 2 lakh rupees should be sent. Okay. So this is also difference between a NEFT and RTGS. Now when we talk about SWIFT, so as we have NEFT for transferring amount in the same country, SWIFT is for international transfers. Suppose we have to make certain payment or transfer of amount to the person living in any other country, then we can go for SWIFT. Okay, so SWIFT stands for Society for Worldwide Interbank Financial Telecommunication. Okay, next, at last we have internet banking and mobile banking. So we all use internet banking, right? So we download various apps, for example Paytm, Google Pay, Phone Pay, etc. So by which we can carry on our banking activities immediately within a fraction of seconds. We don't even have to wait for 1 or 2 days, or we don't even have to go for RTGS for making the payments. We can do it immediately using internet banking facilities. Right? Now what is mobile banking? So now, as I told, I have the bank account in ICICI Bank. Then ICICI Bank will provide me the facility of mobile banking. So in my own mobile, I can download the ICICI app and carry on all the activities in my mobile itself. I don't have to go to the bank here, right? So these all are the services which are provided by the e-banking. Okay guys, so this was all about today. If you found this helpful, please hit the like button. Also subscribe to my channel. You can ask me any questions in the comment section below. Hope to see you in my next videos. Till that, happy learning.